shift focus to Raymond's now. This time around, it was not a great set by the company because the margins have declined 96 basis points on a YY basis, while the profit has seen a jump substantially, and the EBITDA is also a bit down on a YY basis. So what were the factors that played the role in this particular earnings? Let's try and understand that with Mr. Amit Agarwal, who is the Group CFO at Raymond's Limited. Hi Amit, and thank you so much for your time to ET Now. Firstly, the commentary for many companies suggests that the discretionary demand has been hit. Is that the case with you too? And how do you see the demand panning out through the rest of the years, and what's the top line growth that you envisage?
I think let me give you the perspective that the way we have seen that since February, there has been a weakness in the demand because of the various factors. First, you had the rain impact, and then followed by excessive heat, and then a lot of rain in the northern India, which they had the challenges. And the number of days of weddings were also slightly lesser, and people have shifted because of these factors their weddings from a summer season to a winter season. So as far as that is concerned, generally has been the environment, and the first quarter is always a weaker quarter in the seasonally adjusted basis. Now, however, if you look at our numbers compared to the last year, we have been able to deliver growth exactly in the consumers-led businesses, whether it is branded apparel, where we have demonstrated a big growth because of the way we have put together our product basing on the casualization and the premiumization. And we also have seen a bit of a demand surge in our branded suitings business, branded suitings and branded shirtings business, because we are capturing a larger market. So considering that aspect, we have been quite satisfied with the B2C business in the first quarter. However, I must compliment also that we are seeing a very, very strong season coming forward with the festivities as well as the wedding season. But it will be slightly delayed. The reason for the delay is primarily, under the Hindu calendar, you have got one extra month, and that has pushed everything by 1 month. So effectively, what used to have Pitru Paksh in the month of September, now it is spreading out all the way in the month of October, it is ending by mid-October. So anything after that is the puja starting, Durga Puja, and the Diwali starting, and then followed by the weddings. So we see that from the November, December, and February, March, there's a good number of wedding days, and which we clearly are envisaging to capture the demand and get the benefit out of it.
Good morning, Mr. Agarwal. This is Cheryl also joining in the conversation. And your margins have actually come under pressure both on a sequential as well as on a year-on-year basis. And this despite lower input costs. If you could tell us what's exactly driving the pressure on your margins, and also what's the sustainable level that you are envisaging for FY24 now?
So look, we have been very consistent on the margin, as I mentioned, that we clearly see always there is a margin dip on a consolidated basis in the first quarter because of the weaker environment. And especially in this quarter, first quarter, there was a subdued consumer demand all across. So that has also led, but there's a certain fixed cost element which impacts the cost structure, and therefore the EBITDA is always lower. However, if you see comparatively quarter over quarter, first quarter of last year to first quarter of this year, our margins have improved by almost by 0.4%. So I think that gives us a confidence that we are right there. And with our cost structure being controlled in the manner we have controlled, taken out the 400 crore of sustainable cost, that helps the cost. Now, as we have always told, that around that 15% range, 15.5% range, we expect the EBITDA to come for the entire year for the fiscal 24 as well.
Mr. Agarwal, when you continue to sound positive, so just wanted to know what also happens to your store addition plans amidst the demand for ethnic especially. Do you still plan to add as many stores as you have guided for, or would you be recalibrating the same?
No, absolutely. We are very focused on that we are clearly adding stores. And if you see in this year, in the first quarter, we have added 38 stores as well, of which almost like 12 stores for ethnics. We are very clear that from a 75, 76 stores which we have ethnics as at end of June, we will take them to more than 125 to 140 stores by the end of this year. So very, very clear. We stay focused on this plan. We don't get wavered because of the slight weakness in the demand in a certain period. It is a known thing that the first quarter is always a little weaker, but things come back in normalcy. And actually, we are looking for a very strong way. The demand for the ethnics wear of us, Ethnics by Raymond, come in the months of late October, November, and December, because the wedding seasons, and that's a true testimony for the ethnics, that how our products, how our lines, how our stores have shown the effect. So far, we have seen all very positive. These stores have, some of the stores have exceeded our expectation in terms of the sales numbers which they have delivered. But we have to really see the full benefit or the true scale up in the November-December period, when the wedding season and the festive season is there.
Right, Mr. Agarwal, let's actually talk about your real estate segment, because that's definitely picking up pace. You've recently launched a project at Thane. If you could tell us what sort of a response have you been getting for that project, and you were also evaluating several JV and JDA projects. If you could tell us, can we expect some more launches from that particular front as well?
Yeah, absolutely. I think, you see, as we have talked about, that we have been able to deliver the first project, 3 towers, 2 years ahead of RERA, and that has given a lot of conviction to our real estate customers. And because of that, if you see all the projects which has been there in the existence, for the first, the 10x Habitat, as well as the Address by GS, are sold 85% plus. So actually, when we launched our third project, similar kind of 10x era, in the month of February of this year, end of February of this year, we saw an overwhelming response. As we speak today, we have sold almost 40% of that inventory. And just to give you perspective, we launched the third project, the fourth project, so to speak, the Address by GS Season 2, in the month of July. We have signed one JDA project in Bandra, which we expect to launch in this fiscal year, clearly. And we are on an advanced stage of discussions in at least 2 to 3 more projects. And as I mentioned, over the next 4 years, we expect almost anything between 40 to 50% to come from outside of Thane land through the JDA route.
Okay, thank you so much, Mr. Agarwal, for joining us today on ET Now and helping with the growth outlook for Raymond's going ahead, and wishing you all the best.